So, you're looking for a mortgage. Right off the bat, you've got a huge decision to make. Do you go straight to your bank or do you team up with a mortgage broker? Believe me, the path you pick can totally change the game. So let's break down what this choice really means for you.
To really get to the bottom of this, we're diving into some fantastic materials from the financial services provider Finance Hub and Networks. They've given us a great inside look at the crucial differences between these two roles.
All right, here's a quick look at what we're covering. We'll start with why this is like picking an ally. Then we'll get into the big differences, who they actually work for, and, this is a big one, how they get paid. And finally, we'll see how it all ties back to your success.
Okay, first up, choosing your financial ally. And really, you've got to think of this as way more than just a transaction. You're not just getting a loan, you are picking a partner who's going to be on your team for a major financial move.
Which leads us to the big question, right? Who do you trust with your business's future, the bank lender or the mortgage broker? Well, to figure that out, we need to really understand what sets them apart.
And that brings us to the fundamental difference between them. You know, when you peel back all the layers, it really just comes down to one simple thing. Who do they work for, and what's their real motivation? Okay, check this out. This table lays it all bare. On one side, you've got the mortgage broker. Their number one allegiance? It's to you, the customer. Their goal is to hunt down the best loan for your specific needs from a whole bunch of different lenders. Then, on the other side, you have the bank lender. Their allegiance is to the bank they work for. And their goal? It's to find the right customer to fit the bank's own products. That one difference? It changes everything.
You know, here's maybe the simplest way to think about it. A broker looks at your situation and says, let's find the best loan out there for you. But a bank lender looks at their product and says, let's find the best you for our loan. See the difference? It's a small change in words, but it's a massive shift in perspective.
So let's dig a little deeper now. Who do they really work for? We can figure that out by looking at their day-to-day roles and responsibilities.
Let's start with the bank lender. This one's pretty simple. They're an employee. And just like any employee, their main job is to look out for the interest of their boss, which in this case is the bank.
So their mandate, their to-do list, is crystal clear. Make the bank as much money as possible, keep the bank's risk as low as possible, and find people who are a perfect fit for the few loan products that bank offers. That's the box they have to work in.
Now let's flip the coin and talk about the mortgage broker. The key word here is independent. They don't work for one specific bank. They work for you. Their whole job is to be your champion out in the big, wide world of lending.
And because they work for you, their mandate is completely different. It's all about representing your best interests, really getting to know your unique situation, and then doing all the heavy lifting, comparing tons of products to find that perfect fit, all while trying to make a super complicated process feel a whole lot simpler.
All right, now for what might be the most revealing part of all this. How do they get paid? Because if you really want to understand what drives someone, you've just got to follow the money.
So let's just ask the question straight up. Between these two, who has a real, actual financial reason to not only get your loan approved, but to make sure it's a great loan that's going to work for you for years to come?
The answer is your mortgage broker. It's built right into how they make a living. Plain and simple. Their success is directly locked to your success. They only win if you do.
So let me show you how it works. A broker helps you get the loan, and only after it's all settled and done, they get paid a commission by the lender. But here's the genius part, the clawback. If you decide to leave that lender in the first year or two, maybe because the loan just wasn't right, the bank literally takes that commission money back from the broker. This gives the broker a huge incentive to find you a loan that you'll be happy with for the long haul, not just some quick fix.
So what you end up with is this incredible alignment of interests. The whole system is basically designed to make sure a broker's success is tied directly to their client's long-term success.
And the source material really hits the nail on the head here. It says this structure makes sure that good, professional brokers are super motivated to find a loan for you that's not just approved, but is durable and beneficial. The bottom line is simple. You succeed when they succeed.
So the choice you're making isn't just about who can get you the money. It's about whose goals truly line up with yours. Now that you've seen a little bit about what drives each of them, the real question is, how will you choose your financial ally?